Hi guys, welcome back. In today's video, we are going to be discussing about Tinna Rubber and Infrastructure का Q4 FI Q4 FY24 update as well as the Concall, right? So both of these we'll be discussing today here. Yeah, first let us just go into a quick glance of business model. Again, I would have covered the detailed explanation of the business model in my YouTube channel. You can just go to the business update ka playlist. All of the business models will be covered in detail in that playlist. Here, I'll just give you a small 2 minutes introduction so you know the memory gets refreshed, right? So if you look at Tinna Rubber and Infrastructure, what they do is, let's say there is a tire, right? Whether it could be from a tire manufacturing company or an auto company, what happens is most of the times these tires that are there, right? They can't be used for discarding it, and tires are one of it's one of the most polluting and also like very hard to recycle items. So what they take is this end of life cycle tire which is no longer usable. They take it, they recycle it, and they convert into better products, right? So there are four how do I put this, so four segments. Okay, first is your infrastructure, where you mix this tire ka jo recycled product hai, you mix it with bitumen and other components and make use of and use it in making of roads. Okay, and a lot of times this time the government of India that is there, they have been more pushing towards this bitumen ka road, especially because bitumen ka roads jo hai, compared to your normal roads, right? They don't go through that structural damage a lot more. They don't go through that structural damage as easily as the as easily as your traditional roads. They also have like higher resistance towards your change in temperature, and can take a lot of load, right? And of course, the other thing is they're way more economical compared to the construction of traditional roads. The second is their industrial segment. Industrial segment is where they make this tire, they convert it into MRP, which is micronized rubber product, and they make it into a new tire or conveyor belts. Okay, you would have seen that belts that go in the machines like this, like I hope it makes sense, but those kind of conveyor belts. Conveyor belts is made by this company called Pix Transmission. It is one of the companies in the listed space. You can see the third one is they used to make it the steel abrasion, and the last one is consumer product. Okay, consumer product ke matlab you use this recycled tire ka product and mix it again with something else to make aapka gym ka jo mat hota hai, yoga mats that are there, balls, different types of things, right? So this is the four divisions that they have. Now, if you've been tracking this company, you know that the company had come out with excellent numbers for the last quite a year, I would say, and in the Q2 or sometime before that, I don't remember the exact date, they came up with a guidance, right? That in FY27 they will take their revenue to 900 crores, right? They will literally triple their revenue. They have around 6 locations, like 6 Capex, 6 plants right now, and they wanted to take up like 10 plants. The tire crushing capacity that is there, they wanted to increase by around 2.5 lakhs, right? So a lot of things FY27 could have vision like guidance tha, and we have to now check is like how close are they to the guidance? Have they, are they on path? Are they walking the talk that they have told? Okay, so this quarter, if you see, the target for Tinna Rubber that was there is to achieve 350 crores of revenue by the end of this year, and to clock in around 110 to 120 crores in Q4. Okay, and if you see, the company has done exactly literally, and in fact, the Q4 numbers has been way stunning, because Q4 mein we saw that Q3 and Q4 mein hamara wo Red Sea ka crisis start hua tha, right? Because of the Israel and Hamas war. Structure, they import around 60% of their raw materials, so tires that are used, right? So what happens, of course, if your raw materials are getting imported or if your product is getting exported, as a result, because of this Red Sea crisis, there can be a lot of problems, right? Probably you don't get your raw materials on time, probably because of the shipping cost and everything gets increased. And a lot of times there was anticipation that because of this, probably, the guidance to achieve that 350 crores in revenue this year end, could be area par this time. But very fortunately, that didn't happen, and it has been a very stunning set of numbers. Literally to tell, in all parameters, if you have to take cash flows, balance sheet, now income statement, Concall also, very nice, really good company. Okay. Now let's start with the Q4 FY24 ka numbers. Okay, if you see the revenues that are there, the sales growth, the sales has increased by 44% Q4 on Q4. Matlab is Q4 compared to last year ka Q4, and 18% on a QOQ basis, and 20.9% on like FY23 versus FY24 ka basis. So good in terms of sales in all three ranges. If you look at your PAT that is there. The PAT is also up 1.3%, like sorry, not 1.3%, 1.3x Q4 on Q4. And if you look on a QOQ basis, also 56% and 90% on a FY23 versus FY24. That is on a year-on-year basis. So on all three levels, that is Q4 on Q4, QOQ, as well as the full year, we are seeing a good amount of operating leverage, like very stunning level of operating leverage. And I told you, right, like this year, the target was for them to achieve 350 crores. And Q4 May, by the estimation that I had done, they had to clock in around 110 crores because Q1, Q2, Q3 cup, you take the calculation, minus it with the total year revenue they had to achieve. And exactly that is what they have done. Q4 ka top line has been 110 crores and Pura Salka has been 364 crores, whereas they guided for 350 crores. EBITDA margin also has increased. Last year, my EBITDA margin was 12%. Now the EBITDA margin is around 16 to 17%. PAT margin also has increased, of course, right? Agar PAT itna huge, if it increases by this rate, it will also increase, right? So all in all, great set of numbers. Now let us see कि ना Concall में क्या hua hai, right? First of all, if you look at the entire four segments that is there, like I told you, right, उनका infrastructure segment है, industrial segment है, steel segment and consumer segment. Infrastructure segment अगर आप देख लो, it contributes 52% to the total revenue, and this itself has grown by 60% on a year-on-year basis. Okay, so even and if you look at the volume growth उन्होंने data जो है per industry wise, they haven't given a year-on-year data, but they've given QOQ data. But consolidated में अगर आप देखते हो, मतलब all the four segment का combined अगर आप एक data लेते हो, volume growth also has been very good at 22%. So QOQ infrastructure का अगर आप volume growth देखते हो, it is at 16% now. Now why this infrastructure is seeing a boom? Like I told you, because अगर आप हमारा इंडिया का अगर हाईवे का कंस्ट्रक्शन देख रहे हो, right, across the country it has been surpassed, and right now I think we have made around 12,000 kilometers this year. So as a result, because of this, we are seeing that infrastructure segment is growing. ठीक है. अगर आप industrial segment देख रहे हो, industrial segment contributes 25% to the total revenue, and this segment has also grown by 45% on a year-on-year basis. और QOQ में उनका अगर volume growth देखते हो, QOQ में volume growth has been 13%. Now, why has this part of the segment grown is because here they have started to export. So they've started exporting the micronized rubber product जो है, जो MRP है, you know, to a lot of these MNC companies in abroad, in USA, Thailand, I think in Taiwan, Japan, USA, again all these places, and they've also started setting up agents over there, you know, so they can increase their distribution system. So even here also everything is progressing well. Next you have the steel segment. Steel segment भी जो है 13% contribution करता है revenue. That has grown by 12% on a year-on-year basis. And अगर आप volume growth देखते हो, volume growth also has been very तगड़ा at 30% on a QOQ basis. ठीक है. And consumer segment, actually consumer segment is a very, like how do I tell you, very small contribution. सिर्फ 10% contribute करता है. But even this also, this actually has been seeing a lot of growth in the last few quarters, right? Even this has grown 100% on a like revenue on a year-on-year basis. अगर आप volume growth करते हो, volume growth QOQ में 15% है, but इस consumer segment का year-on-year volume growth is also 100%. So very, very strong momentum in all the four segments that we see. It, you know, it's been firing, right? So overall great. अगर उसका tire crushing capacity देखते हो, right? They had targeted to take the tire crushing capacity to 1 lakh, right? And as of FY24, it is 1,05,000, and in FY27, जो vision 2027 है, they want to take the tire crushing capacity to 2.5 lakhs, right? Per annum, of course. So even there also you're seeing, even this tire crushing capacity अगर आप देखते हो, from last, like मतलब full year में अगर आप देखते हो, FY23 versus FY24, even that, this has increased by 44%. And similarly, Q4 मतलब Q4 on Q4, if you see, it has increased by 30%. So like I told you, right, everything is good. Revenue है, operating leverage है, PAT margins are improving, EBITDA margins are improving. If you look at volume growth is there, all the sector में भी पूरा का पूरा growth है, ठीक है? So overall good. If you look at the Capex right now, they do not have any plans of Capex other than the maintenance Capex जो होता है around 30 to 40 crores as usual. That is what they have in mind. And जो भी उनका plans है, because right now they have 6 plans, they want to take it up to 10 plans. When and if they want to do the Capex, you know, they will do it. It could be either a brownfield Capex or a greenfield Capex. Because right now what they have is, last year if you look, I mean in this FY23-24, they had acquired a plant at Oman. Okay, so that is also positive, cash flow positive ho gaya, EBITDA positive ho gaya, even that is running. They had done like a brownfield Capex, I believe in the name, I think Barley and then P, like I think but yeah, I might be pronouncing the name wrong. I'll have to go and check with the investor PPT because I read long back, but I think Pipert or something. There they did to increase the capacity. Even both of this also plant will start contributing very, because they'll start running in full capacity in FY25, especially the Varle plant, and they will also add around 70 to 100 crore in this coming financial year, right? Because I think it was just started in production in this last year. So to go into that full scale production capacity utilization, it will take time, right? And as of now, if you look the export sales that are there, it is contributing around 8% ka revenue. So overall, very, very strong company, all in all good. Even if you look in terms of guidance, also the guidance remains, again, they haven't revised any guidance because of this Red Sea crisis or other issues. Because Red Sea crisis की वजह से एक तो छोटा impact हुआ है कि like the input cost that is there, it has increased by 10%. But fortunately, they were able to pass on the price to the customer, so it didn't really affect them that much. But going forward, you can see that FY27 guidance still continues to be very, very strong. That they want to increase the revenue. Like is pura saal ka revenue has been 364 crores, and in FY27 they're targeting 900 crores in revenue, literally 3x approximately. You can tell. Even profitability they're targeting around like 35% CAGR, right? They want to increase the number of plants that are there. Right now they have 6 plants, and they're taking it up to 10 plants by FY27. And also the tire crushing capacity, jo abhi 1 lakh hai, they want to take it up to 2.5 lakh. So overall, this is the guidance that remains very strong guidance. And in FY25, that is the coming year, they clock a top line of 500 crores in revenue. So overall, I would tell you like great set of numbers, great Concall. There is again nothing to point at the finger and tell ki like arey kuch galat kar raha hai yahan pe, right? In terms of, if you look, I'll tell you like as usual, my how do I put? I'll do 1 year for PE. If you take that 33% ka CAGR and according to the guidance they've given, and take the FY25 ka like 1 year forward PE comes in the range of 35 to 40, right? So for a company that is going to triple its revenue and also be profitable and provide you with an operating leverage at the same time, 1,500 crore ka market cap ka company, you can infer very cheap for you if it is at like falls in the range of 35 to 40 P. I think what is most and very important, critical over is they continue the pace of growth. They continue to deliver what they've done for the last 3 quarters, right? They've been very consistent in providing the earnings momentum, like 100 crores. Because not targeting 500 crores in revenue in FY25, I would say you revenue every quarter. Like again, just a rough estimation. Like that is what they have to do, and hopefully if they're consistent, I don't see wouldn't, right? So that's that with this Tinna rubber. The last thing I'll cover is the cash flows. Okay, I'll just share my screen and show you the cash flows. Let me just get this. Again, cash flows, maybe there isn't any problem as such. It's all is well and good. This is standalone. We have to check consolidated. Yeah, let me just share my screen. Yeah. So income statement, like I told you, no problem, right? Everything is perfect. Even the EPS ka growth, if you see, can you see? Even EPS also has doubled, like triple actually, 3 to 9. Even on a year-on-year basis, also 12 to 23. It has literally doubled, like because 12 twos are 24, so approximately 12 to 23, you can tell like 95% ka growth, even 90 to 95% ka growth in EPS also, right? So overall, again, you can see revenue, PAT margins, there is no exceptional items of any kind. So overall, great, right? Next thing we will do is you check for asset liability mismatch. You check your current assets by current liability, and you see there is no asset liability mismatch, right? Overall, great. Here, I wouldn't complain a lot if the quick ratio is less than 1, because here, you have to keep inventories always in stock, because you never know, like, because all the manufacturing process over here is like takes 3 to 6 months. So it takes a lot of time. So that is there. If you look at the equity base also, can you see equity base also has increased from 95 to 127 crores? So good. If you look at ROE, ROE is your nothing but net profit divided by your equity base. That also has improved from 20% to 31. And I always tell you, right, always look at the direction at which ROE is improving. And very, very good in terms of ROE also here, because ROE improving is a factor of three things: आपका asset turnover ratio, margins, as well as your financial leverage. And you can tell here all the three they have got, because we have seen the tire crushing capacity has increased by 40% on a year-on-year basis. So that, and we have seen our volume growth also 22%. So of course, asset turnover is there. Then we see margin also, because we are seeing constantly EBITDA margin improving because they're moving more towards the value-added products. And of course, financial leverage here yahan pe because of debt, right? You will see one thing here: the debt that is there has increased, right? 24 crores tha last time, and now it is 46 crores, right? I know here, if you look in terms of percentage changes, like, because it's literally like around, it's literally doubled. Percentage change, it might look huge, but if a company 46 crores in revenue, 46 crores debt is not a huge deal. And as long as your debt to equity ratio is in control, right? Again, see, debt is not a bad thing. You can leverage debt for your own benefits to grow your company. It becomes a problem when you have debt, it goes above your debt to equity ratio, and your ROE is not improving, and then your sales are not improving, right? That time it becomes a huge problem. Where here you are seeing everything, all the parameters it is doing well, and you're using debt here in a very sane way to grow, right? Now, of course, here can you see again the profits have doubled, profits before tax, that is there literally 28 to 52, not doubled, almost double, you can tell, because 28 into 2 is how much? 30 plus 30 is 60 minus 4, 56. So it is 52. So roughly around, you can tell, I think 80% odd, 80 to 90% odd, you can tell. Again, I do a lot of rough calculation, y'all. I don't usually use calculator most of the time. So yeah, after that, if you see all your jo aapka tax hai, finance cost hai, and all of that, if you take, in spite of that also, you'll see the cash flows has been very positive, right? You see here 41 crores abhi 64 crores hai. So good here also. Now you see this working capital. Working capital mein, you will see a lot of it is in either inventories. Again, here also receivables भी hardly कुछ increase हुआ है, because last time there was no receivable. अभी receivables जो है, it has increased by 4 crore, like 4.7 crore. Again, right? 364 crores का सेल है, 364 crores में 4 करोड़ का receivables है, no problem, right? Trade payables has also trade has increased 18 crore है. Again 2 crore था यहाँ पे, अभी यहाँ पे 18 crore है. Here also another thing to note, please compare it with respect to sales. जब एक sales हो रहा है 350 crore का, 18 crore is not a big deal. I know if you look from percentage wise यहाँ पे बड़ा दिखेगा, but always compare it with sales. If the sales is increasing, उस हिसाब से अगर inventory और receivables थोड़ा बढ़ता है, it is okay. The problem happens जब sales नहीं बढ़ता, inventories वहाँ पे फुल के बैठा है, receivables का payment भी फुल के बैठा है, और payables भी. That time it becomes a problem. But when you have a 364 का sales, 18 crore और 5 crore का receivables और payables is absolutely no big deal. Now the last, अगर आपका सबका, अगर आप working capital changes के बाद भी अगर आप देखते हो ना, can you see 31 crores था? This is in millions or lakhs, by the way. Lakhs, sorry. Yeah. 31 crores था, अभी 59 crores है, right? You will see even the cash flow from operating activity has doubled, because 30 into 2 is 60. So 31, so this should be 2, but 59. So again, approximate calculation करो, 30, इसको approximate करके 30 ले लो, 59. So even cash flows has also doubled over here literally. So in spite of all this, थोड़ा जो receivables और payables भी बढ़ा है, in spite of this, you can see that the cash flows has been positive and it has been doubled, right? अब इसका तो ज्यादा से ज्यादा जो है, whatever it is there, the cash flows from operating activities जो बचा हुआ है cash, you will see most of it, क्योंकि 59 crore है, and out of 59 crore, can you see 72 crore has been done in terms of investment. And investment कहाँ पे हुआ है? Plant, property and equipment. इसके वजह से अगर आप देखते हो net cash flows जो है ultimately negative हुआ है, and that's okay, because I would rather have a company जो cash flows जो है, rather than keeping it in the bank or keeping it in its own with itself, it is using it to putting up to implement more and more growth. And here अगर आप देखते हो again, plant, property and equipment, like I told you, because they did Varley plant का एक capex था, which was I think around 30 to 35 crores. वो और एक capex था called, I think, in Pipet or something, in one of their plants, and also they acquired the Oman plant, right? So all of, in this financial year only, all of these three things happened. So it makes sense that the 72 crores has gone, right? Overall, you can tell, right, from the entire thing. Yeah, overall you can tell from the entire thing कि like cash flows are very solid, balance sheet is solid, no problem at all in anything, right? So overall, good set of numbers, great guidance. The only thing right now it remains is that we keep continuing to track the company and see if the management continues to do what it has done over the quarters, right? Because that is very important. And we as investors also need to change our, because see, management can come and twice. It is our job as investors to sit and track if the management is doing exactly what it told, because that is when the shareholders get rewarded. The second thing is, of course, the management can tell XYZ things, and of course, they might have the intent also. But a lot of times you do realize we live in a very dynamic world, and anytime things can change, right? Sorry, anytime things can change, because see, even today we all want to live up to, like, probably we are 100 years old, right? I every day I go to sleep keeping an alarm with the hope of waking up tomorrow, but we do not know what happens tomorrow. Similarly also, the management can tell, and they might have a really good intent to, and they're probably the best and hardworking management to get there, but tomorrow things can turn, probably one war, one economic crisis, something can happen, and the entire thing can topple up and change the entire investment decision. So it is our job as investors to continue to track, right? And our job for our infrastructure, of course, Q4 has been solid, Q4 has been great. But for FY25, we continue to see and track that these people do around 550 crores in revenue and at least keep clocking around 100 to 120 crores odd in odd revenues every quarter, right? So that's the target for Tinna that we can see in terms of earnings, right? That's it with Tinna. I covered everything, and yeah, I have just one last video to make. That's on Bharat Wise and Usha Martin, but I'll try to make that video today because I am sort of tired after making 3 videos. But yeah, let's see. That's that for today. Y'all take care. Bye-bye.